following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block, and I hope all of our listeners out there are having a fun and a safe and indeed a profitable trading week. My name is Mark Longo from theoptionsinsider.com, as well as many of the programs here on the Options Insider Radio Network, and I am joined by our returning cavalcade of stars, starting off with the man from the mountains himself, good old Uncle Mike Tosaw from Know Your Options Inc. Uncle Mike, welcome back to the show, sir.
Always good to be here. Thursday's the option block day, and so just always happy to be on the option block.
It's a nice way to bring the week to a to start the end of the week, we should say, with a
that's right.
Nice
it's
hit
it's 5 o'clock somewhere, right? It's Friday somewhere.
We run this show on the Philippines clock, so we're actually far.
I actually
ahead.
think it's not 5 o'clock somewhere, believe it or not, except in the middle of the ocean.
Well, like I said,
there's some shark where it's 5 o'clock.
Those
I'm
folks
just looking at the time.
Those folks out in Guam are having a good time right now.
It's 5 o'clock in the morning somewhere for sure. Let me see time zones in the United States.
And listeners, that would be Mark Sebastian from OptionPit.com doing his best time zone research here live on the program.
What I'm known for. I don't know if you knew that, but they used to call me the time trader. Because it was like I was so fast, it was like I stopped time.
It's like you know the time in Trinidad and Tobago. How do you do that?
Exactly. Exactly. So it made me super powerful. That's what they thought was so amazing about me.
All right, and with the team assembled, we're going to dive right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is, of course, the portion of the show where we discuss what was lighting up the tape, what was moving the markets, what was causing all the hubbub today. And it was a day with a wee bit of hubbub today. Most of the major indices were down about 2% down the day. S&P down about roughly 26.5 handles to 1234. The Dow sub 12,000 at the close today, down 198 handles to 11,997. The NASDAQ down 53 handles to 2596. And the good old VIX cash, ever the darling of this program, up 1.92 points to 30.59, or almost 7% on the day. So let's start there, as we are wont to do on this program, with our good old friend, the VIX cash. Back up north of 30. It's been a week of vacillations for our friends over on the VIX side of the fence. Mr. Sebastian, I'm sure you've had your hands full watching all this epic back and forth here, from the 25 handle to the 30 handle.
We are at serious volatility resistance here. So I'm really interested to see where kind of VIX goes. Up until today, we've had 7 days in a row of the VIX below 30, which had been by far the longest period of time below 30 since August. I mean, even in August, we weren't below 30 for that long. So back to July. So for us to close here, we're still right up against. There is a lot of resistance against VIX actually being able to hold 30. It's going to take our European friends dropping the biggest ball of all time, I think, to really push this market down. I know it sounds silly. Stop me if this is wrong, but there was zero sense of panic today. We didn't have a massive push at the end of the day. We just kind of had a slow sell-off kind of throughout the day, relaxed, orderly, and kind of a no big deal. I wouldn't be shocked to see us kind of turn right back around. We're right at a resistance for option applied volatility. And if you kind of look, part of the reason the VIX really, almost 7% may sound like a lot, but in actuality, it's not that big of a deal. And part of the reason why we're up that much is that the VIX had been hanging out at such a massive premium to market movement through today.
Yeah, we've been talking about that for a while, how, this VIX has just been so north of 30, despite the preponderance of institutional and professional sentiment that it's got to head south. It's got to head south. It's got to head south. People have been saying that for so long. It should be south. It should be, you're right, and yet we've been saying that for a long time. It's finally starting to the external factors that kept it artificially inflated are perhaps finally starting to wane.
Yeah, and you can actually see it breaking, and I do think that we're in a new range. I like to think about the VIX as really having two means. It's got its long-term mean and then its near-term mean. And we have entered a new kind of near-term mean that I think is closer to 27, 28% as opposed to 31, 32 that we were at just a couple of weeks ago. Now, how do we know if I'm wrong? Well, you look out tomorrow, and if we're trading 35, then I am wrong. But my feeling is that they've really priced in a lot of this. If you consider VIX a fear gauge, which is debatable, then are we afraid of what we know or what we don't know? We know there's going to be a problem. That, to me, isn't cause for fear or fret. It's when I'm not sure of the scenario. The same reason why, how people know they're going to die, they're kind of okay with it. That's
why, yes. I often think I'm quite okay with that death thing.
No, well, that wins the analogy of the day award in my book. I like that.
You don't get that analogy from good old Andrew. You just don't.
No, I mean that's from you do not. But you'll hear other things from him. But one of these times, if you're ever gonna have barbecue on the show, you got to make sure you have Andrew on because they go way, way, way back. That's Jim Roseanne for the rest of you. But it's interesting. I say that because, you see somebody in a hospital bed and they know they're passing away and they know they're sick. There's this kind of acceptance of fate. It's when somebody kind of shockingly gets sick or shockingly is run over by an 18-wheeler that we see the kind of the real, let's just say, pain, if you will. So, that's kind of my thoughts. The VIX is now like a patient who is terminally ill. Sounds terrible.
Sibo will love that comment. But yeah, it's interesting. We have seen kind of the back and forth of the push and pull of the paper flow out there for a while. The prevailing overwhelming sentiment, at least to the long term, was to the downside. So people were loading up to the downside in VIX. But then in the near term, there was a lot of concerns. People were loading up on near-term downside in SPX. And that was, of course, buoying the VIX right back up again and keeping us above that 30 level for quite some time, probably when it wasn't warranted any longer. People were just paying up for that protection. And then we saw people finally starting to give up some of that protection or cash it in because it's starting to pay off a little bit there, even at those crazy inflated levels toward the end. So at a certain point, people have bought their downside protection in SPX. People have put on their insurance for the near term. Some of them are already starting to cash out. I mean, there's got to be just an impetus to the downside here, I would think, net of the paper flow for VIX going forward. So if I had to come which way of the coin, the 30 over under on VIX for, let's say, the next few weeks, barring Eurozone implosion, which could happen. That could easily happen. Barring something even worse coming out with this man financial thing, I have to lean the south of the 30 equator.
Agreed.
Let's make it a trifecta, Mr.
Yeah,
Mr. Tosaw.
I think it'd be tough to shoot it up, but that's just when something crazy happens, and then it'll be at 90 again, or at 81 again.
Yes. Listeners, you really need to be here on the live call to see all the fun things that go on before we cut them out so we don't offend everyone and everything. Of course, there was some other things going on today in the old market. The MF Global thing continues to just be a nightmare unfolding on an ever-growing, increasing schedule. And, these scandals seem to come around every year or so. There's either a rogue trader side on the option, a rogue trader scandal on the option side, or something going on with one of these banks having poor compliance, poor oversight. But it's funny, I've been talking to a lot of guys on the futures side lately, and they're usually not ones for dire pronouncements, but everyone and their mother is just saying this MF Global thing is really bad, and it's really going to taint the business for a significant time, if not even more dire prognostications.
Cover every dollar is what's going to end up happening.
Yeah, it's not looking good for them either. They being caught up with all that audit stuff doesn't exactly. And no one knows where the cash is. Corzine testifying today. I don't make this the MF Global show. You can easily make a whole show just about all of that. But it is amazing to see in this day and age how such an enormous broker that we all knew very well and we all, I'm sure, had dealings with in some way, shape, or form.
Up until like a month ago, it was like, Man Financial, and you wouldn't have thought about it.
Yeah, exactly. It's just an established brand out here in Chicago and in the derivatives world, and everyone knows those guys. I mean, you never would have thought that they wouldn't have had oversight or proper risk custodianship or proper risk management of their accounts. It's absurd.
I had heard someone. My dad actually knows Corzine. And it said that the guy was kind of arrogant and kind of asked for the world.
Gee, you think an ex-Goldman guy arrogant? What a surprise!
And part of the reason I heard that part of the reason got kicked to the curb in Goldman was the same reasons.
Yeah, I think he had a push and pull with Paulson there, didn't he?
Yeah, he did. Paulson got rid of him.
There was kind of like two factions, what I heard: the Corzine faction and the Paulson faction, and Paulson won.
Yes, he did.
And of course, you have Gensler, another ex-Goldman guy, who of course is the CFTC chairman right now. So that's all sorts of Goldman. It's a perfect storm for the on Wall Street or the Occupy Wall Street crowd.
Well, the interesting thing is that the difference between Goldman and everybody else, it seems, is that these Goldman guys, are used to having really tight risk management rules. Say what you will about Goldman Sachs, but they give an incredible amount of power to their risk management team. And that is really what I think separates them. Their risk managers are basically given carte blanche to walk into the CEO's office and shut something he's doing down. They've not gotten into so much trouble. Say what you will, but there's a reason why they're the best run firm. You can hate them for making money, but really, maybe they're making money because they're good, not because they're cheaters. In truth, it's because of both.
I was just going to say, you're being very charitable there, sir. I'd say there's a wee bit of both camps at play.
Yeah, it's a little from column A, a little from column B, but hey, I'll give credit where credit's due.
I certainly know a lot of that pick-off paper I used to see coming in at 301 or 259 had the Goldman stamp on it quite often.
792, I think, was another one of theirs.
When Ogre came our way, we got the heck out of Dodge.
I don't want you to think that I actually, don't get me wrong here, folks. I still think Goldman's a bunch of cheaters.
This episode brought to you by Goldman Sachs.
They're good cheaters. Let's just put it that way. They know how to cheat.
They don't get caught as often as the rest.
They combine risk management and cheating into one thing. It's incredible.
All right, and before we go from the old trading block, Uncle Mike, I know you're a metals man. What were you watching today for your metals rundown? First off, listeners must know, what was the BBI for today, sir?
Very calm. It's the joy of put options. It was very calm and boring.
You've been eating your bran again?
Well, one thing I noticed in the metals, and I saw something interesting on Ford today too, but just with gold and silver, we started off a little bit higher, but then as the day went on, people wanted to go home and cash. So it's definitely been been fairly volatile intraday. The thing that I noticed in Ford, though, they brought their dividend back. Mark, did you get a chance to see that?
I did, yes.
Look at that.
Yes.
Yeah, so that's exciting. So now owners of Ford get an extra 0.5% annually in their annual dividend payment. So it's something that they took away 5 years ago, but I think it's a good sign. And then the Ford jumped on that news, and then the market pushed it right back
and the
down.
market cut the legs
Which
right
goes to
out
show
from
a
under them.
sinking tide lowers all boats.
Well, what do you think, Mike? Do you buy Ford and put it on a drip?
I like Ford. Well, it'd be good if you're getting many, many millions of shares, perhaps, but I don't know if I would do it with a smaller amount.
You wouldn't just buy like 1,000 shares of Ford, put it on a drip, and sell calls against it?
Well, that's what I'm doing, but it's not on a drip at this point.
Okay. Well, I mean, a nickel doesn't buy a lot of stock.
Yeah, you gotta have
1,000 shares. You get what, $50?
You got to have a bit of some shares to really make that work
think
out.
about that. 1,000 shares at a nickel a share, you'd get $50. That buys you 10 extra shares right here, basically, right? Or 5 extra shares. You know, it doesn't take very long before you've got an extra 100 shares there.
That's an annual nickel dividend, I thought it was.
Yeah, well, even so. Then next year you're getting $55. You're buying 5.5 shares. Next year, so on and so on.
If Ford's hanging at 10 for multiple years, which kind of defeats the purpose.
You throw it. You know what? All I'm saying is you got $5,000. You buy 500 shares, put it in your kid's account, put it on a drip, and then sell calls against it every month.
I like it.
There you go. I'm thinking like a KYO guy.
Yeah, I think you guys have infected me as well, because I did that a while ago with some Ford. I put it in the long-term accounts. Just been writing calls against it like crazy. It's one of those fun ones to do that for the old kids' college fund or whatever the case may be. Any sort of long-term money, Ford at these levels with these call premiums, it's an attractive opportunity.
That is for sure. And now you get an extra nickel a year.
Exactly, on top of all that juicy call premium.
As if life couldn't have gotten any better.
That dividend may actually increase if Ford continues. Yeah.
I think it will. That's my hope anyway.
So you guys back heavy into Ford? You said you had scattered positions across multiple accounts. Are you doubling down now in Ford?
Not doubling down. We're still scattered, so we still have a lot of different scatterings going on.
You gonna blast out some Jan 10 puts and just double down?
I don't know about doubling down, but definitely it's very attractive at these levels. That's for sure.
Yeah, and has been vacillating around quite a bit. He's been going from, 970, 980 up to 11, 12 half or so. So if you've been trading actively in and out, it's been a fairly good name, even for those degenerate premium buyers amongst us.
Oh, those degenerates.
I've actually been one of them lately in Ford. I've been buying premium. It feels so alien. Don would disown me, Mr. Sebastian, if he heard such thing.
Yeah, I know. Well, he'd just say sold to you and then move on.
All right. And with that analogy, or with that tip of the hat to volatility views, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we highlight the interesting and or the unusual options activity that was lighting up the tape today. And it seems the trend of the day was three-legged spreads for the most part. That seemed to be the trade du jour on the market. So we're going to kick things off here with Yahoo. Closed today down a whopping penny to $15.61 on the day. And what we actually saw earlier in the day was a lot of interest in Yahoo today because the rumor was coming out of the All Things D guys that Yahoo was meeting with some private equity guys on perhaps selling the firm finally. How many years after Microsoft offered them, what was it, $30+ for the firm? 32, 34? I forgot what exactly they offered for them.
Yeah.
But at least double where the stock is now.
I think it was about 31.50 or something like that, and they said no.
They said no. We're worth far more.
Maybe the stupidest decision ever.
That's what you get when you bring the founder back. He's like, I'm not selling my baby to Microsoft, the evil empire. And that, of course, worked out very well for them. But, of course, so these rumors have prompted a lot of bullish options activity here in Yahoo, including one very sizable three-legged spread. We have someone picking up the April 16-20 call spread and then financing that with a sale of the April 14 puts. And he did it all for a net of about 30 cents, and he did it 44,000 times roughly. So a very sizable 132,000 contracts going up today in this upside call spread financed by the downside puts. I kind of like this spread, actually.
Love that combo. I love the strategy. Don't know if I love the stock, but love that strategy.
I mean, if you're going to do it on Yahoo, this is the way to do it, I think. Finance this sucker, because who knows where this thing's going in the near term. Of course, you have that downside. You got to be ready to pick it up at around at around the 14 level. But if you're okay with that, then I think this is a decent play. I think there's enough suitors sniffing around Yahoo to keep some of that upside premium and some of that juice going for a while. So you might have a opportunity, I think, to spread this off maybe in the near term. If the stock gaps up a little bit, you could fly it off. You can do a lot of different things with this. But it's interesting to see this, and it's certainly a heck of a lot more savvy than some of the trades we outlined last week that were going up in RIMM that we're going to talk about in a little bit. But any of you guys watching or playing in Yahoo today?
You know what? I stopped playing, and the only time I play in Yahoo is when I decide to look through my junk mail.
Oh, you didn't do your traditional Yahoo thing, Mr. Sebastian.
What's that?
Yeah, you let me down, Mark. Come on.
Let's go Yahoo!
There we go. I know listeners are waiting for that one. Yes, it's been a while since Yahoo's been on, so
I know.
Perhaps you've forgotten.
Yahoo's turned into such a crappy company. It's more like Yahoo.
Yeah,
it's more the way you should do it.
Yeah, it
think?
really is hard to really get a handle on what Yahoo's business model is these days. They have some really high traffic web pages, but aside from that, I don't really know. I couldn't really tell you what they have.
Yahoo Finance is actually an excellent resource. I will give them credit there. It's a really, really great resource for news and information, and it's still better than even the Google Finance one. But yeah, aside from that, I mean, what else do they really have?
Yeah, they have great little individual things here and there. Yahoo Mail was ahead of its time. It's kind of other people have caught up to it now, but it was very early, one of the best web mails for a long time. They have some pages a lot of people don't really know about, but they're very popular with the broad audience, like OMG. That's a Yahoo property, and they get tons of hits on those kind of things. So there's a lot of very broad and disparate elements under the Yahoo umbrella, and that kind of makes it hard to really evaluate or really know what their business is, let alone what these private equity guys are going to be buying. I'm sure they're going to buy it and probably spin off a lot of the junk and just keep maybe a few things here or there. But it's a content play at this point. It's kind of like what AOL has been doing. They're gobbling up a lot of interesting properties throughout the web and making a content business out of it, including Huffington Post. Maybe these guys see Yahoo as something similar and they could turn it into a big content portal.
Maybe AOL could buy Drudge Report too, and then they'd have Huffington and Drudge Report at the same time.
Well, the rumor is they're sniffing around the option pit, so maybe you guys will have a nice check from AOL.
That'd be a great fit.
Because that brand goes well with the AOL brand,
it does.
Snarky options mentoring and AOL.
Exactly. Perfect. You've got a bad trade.
That would be great. I would pay money for a Mark Sebastian, voiceover for that, for something that comes on like, put it on your trading desktop. You've made a terrible trade.
Yeah.
You're giving up edge.
Nice job, jerk.
We should make we should make that sound clip at the end of the show for listeners to download and put on their own.
I think that's actually a great idea. We should do that. That'll be a bonus that we put on. There'll be a bonus clip for you to download with this.
There we go.
Me going, you've got a bad trade.
I love it. All right, and then moving on to Liz Claiborne, a company with at least a little bit more of a defined business model than Yahoo, yet a similar type strategy, or at least a similar three-legged spread going up in Liz Claiborne today. Liz Claiborne closed at $8 even today, down about 24 cents or 3% on the day. This is the name that does about 2,000 contracts a day, not exactly lighting up the tape most days, except for today, of course, where they did nearly 31,000 contracts. And we saw, like I said, another size three-legged spread going up here in Liz Claiborne. This one, they picked up the April. Once again, three-legged spreads in April. Maybe it's the same guy trading them both. Picked up the April 6-8 call. I'm sorry, it's the 6-8 put spread He did that 10,000 times. Then he financed it with a sale of the April 9 calls 10,000 times. He netted it all out for a credit of a penny. So he picked up that put spread for a penny. Not a bad, let me see, that's not a bad little do. All right around at the money here. Any of you guys, I know, Sebastian, you like ladies' clothing names. You watch Liz Claiborne at all?
You know what? No, not as
more of a
much as I
Chico's
used
guy,
to.
aren't you?
And I've been trading a little less out of the Chicos as much as I used to. But, yeah, I've just been, a lot of these kind of clothing lines for 35-plus women are having some serious problems. And Liz is just one of those. Talbots, they're all doing terrible. Mostly because of the current trend for women 35 plus to dress like sluts. I think that's the problem.
They all want to go shop at Forever 21.
Yeah, they're all going to Forever 21 and like in the juniors section at Nordstrom's.
Which, by the way, is like the worst name for a company. Forever 21. Is that what do you always want to be 21 for the rest of your life? Maybe 25. I could see you're a little bit more. You're a little older.
Sorry.
You have a little bit more sense.
It depends. If I was like, let's say, when I was 21, that was my junior year of college. That was a pretty good year for me.
You were a late bloomer. I was graduating by then.
Yeah, that was my junior year of college.
All those years of reform school held you back.
Yeah, exactly. But I would go. If there are worse ages to be, Forever 77 would be awful.
Yes, I'm saying they're going in the right direction, but maybe 21's a wee bit too young. You just got to school.
25 means you're working.
Yeah, you got some money. You got some money to your name. You're a little bit more established. You kind of know who the heck you are. You're not just some schmo straight out of school, bright-eyed and bushy-tailed. Maybe that's what you want to be. I don't know. Not I.
Yeah, that's true. Bright-eyed and bushy-tailed out of school was pretty good, though. In school is pretty nice, too, because you have zero responsibility.
You just nap all day, yes. That is the one part of college I do miss the most, the daily naps.
Zero responsibility and all the freedom in the world? Yeah.
That was nice.
I'm looking here at the Claiborne options chain, getting back to what we're talking about. It's really pretty fun because there's a 50 lot here, a 60 lot. There's a 250 lots. That's decent size. Then like a 10 lot, a 3 lot, blah, 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 blah. Then you get to April, 10,000, 10,000, 10,000. Just fantastic. Oh, then there's a 3 lot in July to round it out. So not exactly the most liquid of names today, and yet this guy just lighting up the tape here in Liz Claiborne. I really don't have, like I said, I like the way he structured the spread similar to the other one. I don't really have a fundamental opinion on this underlying one way or the other. So I don't know long term what about the play here. Tosaw, do you watch the ladies retailers at all?
Not if I can help it.
You're a big Dollar General man.
If it costs more than $1, what's the point of wearing it?
Exactly. My philosophy, exactly.
If you paid more than $1, that's what they should have their thing be. If you've paid more than $1, you got ripped off.
All right, and then 2 quick hits to close out the odd block today. We talked about RIMM last week and Darden Restaurants earlier in the week, and both of those trades are both looking substantially worse right now. Of course, last week on this show, we talked about someone coming in and loading up on pure lottery ticket flyers, thousands of the 1 day to go weeklies and then 1 week weeklies as well, all upside in there, 19, 20, 21 calls on both. Of course, last week's weeklies expired worthless because the stock went out around 16 something, I believe, and of course RIMM is trading today, closed today $16.33, even lower. So all those upside 19, 20, and 21 calls that we talked about last week that are expiring tomorrow, also extremely worthless. So this is the guy who wasted a couple $100,000 on pure flyers, pure lottery tickets. Talking about the complete opposite end of the spectrum from what we were just discussing, which were a little bit more savvy, a little bit more nuanced trades on the spectrum, financing a bet here with a sale in another direction. It's a little bit more sophisticated, 3-legged spreads, and this guy is just loading up on out-of-the-money weekly options. It was just a bad bet all around. Obviously expecting a big explosion to the upside in RIMM, and he got completely the opposite. So not all of the quote-unquote insiders or unusual activity is indeed the smart money, and that certainly was not. And of course, we also talked about someone scooping up 2,300 of the D's 50s in Darden Restaurants, DRI, back on Monday. And if you've been watching DRI since then, that was pretty much one of the worst trades you could have put on because DRI has looked nowhere close to those levels ever since. It's closed today at $43.08. It's down substantially since we talked about it earlier in the week. They announced very poor earnings. So those D's 50s are now completely worthless as well. So that was nearly $100,000 in another lottery ticket that someone threw down the toilet. So little follow-up here on some of the unusual activity we highlighted. Two relatively sizable losers for your listening pleasure. So there you go. You're not the only one throwing good money after bad out there in the marketplace right now. There are many others throwing much more money after much worse trades. All right, since the boys in OX are otherwise engaged today, we shan't have the express block today, but we will have a strategy block.
The strategy block.
And welcome to the strategy block. This is, of course, the portion of the show where Uncle Mike, the man from the mountains, descends from on high with his options, wit, and or wisdom, and his tricks and his techniques. So, Uncle Mike, what do you have in store for our listening audience today, sir?
Today, I want to go over a strategy and how we relate it to higher income, higher net worth individuals. A strategy that I've talked about on this show in the past, the simulated index concept, where let's say you had $100,000 with which you wanted to have stock market exposure. One thing you could do is just buy $100,000 worth of SPY. Very simple. The market goes up, you make money. Market goes down, you lose money. The simulated index concept that we employ so often at Know Your Options dictates that you take $80,000 to $90,000 of your money, put into something that you deem as safe. Now, what can that be? That can be a bond. It can be a tightly collared security of some sort, whatever you deem as safe. And we do a lot of exercises with our clients to determine what is safe in their situation. And with the other $10,000 to $20,000, we would put it into a call option on SPY or SPX or XSP, just depending on the client's tax and financial situation. That's something that we do for what we refer to as the simulated index concept. But now let's say that you're a small business owner, or let's just say that you earn enough income to where you've maxed out your Roth IRA, or you make enough income to where you don't qualify for a Roth IRA, and you've maxed out your 401k, you've maxed out your SEP IRA, your simple IRA, and you're looking for another area with which you can get some type of tax beneficial treatment. Well, oftentimes in our business, unfortunately, people go to, well, maybe not necessarily unfortunately, but oftentimes there's a lot of packaged products that are out there that exist. But one thing that we like to do for clients, if they do exceed their retirement plan contribution levels, or once they've already maxed them out, we look to life insurance. And the reason that we do is not because we put people in the mutual fund loaded variable universal life policies. We don't have anyone that's in those. But if you're looking for fixed income exposure and you need some type of a tax shelter, life insurance can be the answer. And so one thing that we do is we combine the life insurance as the quote unquote safer, boring investment. And then we will use call options with a limited portion of either the 401k, the SEP IRA, the traditional IRA, whatever the case may be. And then by doing that, you're creating exposure to the market. You're creating tax deferred, or if you set it up right, tax-free income through the life insurance policy, through policy withdrawals and interest-free loans, depending on how the policy is set up. And you're getting a lot of those same tax benefits, in some ways better than just using the first few amounts of your income in your traditional retirement programs. Now, the other thing with the life insurance policy, let's say it comes to a point to where you know that you're not going to need to draw income on it. Well, at that point in time, you have choices to where you can shift the policy to possibly avoid estate taxes. There's a lot of things that you can do with it. So at Know Your Options, it's not just about option trading. It's about really knowing your options. Sorry, couldn't resist that shameless promotion.
And that's one to grow on from the ladies over at Know Your Options, and a few men over there as well, I believe. But yes, that's a good one, Uncle Mike. Thank you for that. And now we're going to close out the old strategy block and roll right into Around the Block.
Around the block.
And welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our collective trading screens and what we're watching for the end of the week into the old weekend, as the folks across the pond might like to say. And there's a couple of things that are worth watching. Of course, we discussed earlier in the show the ongoing tumult there in the Eurozone, and that, of course, is continuing to keep the VIX in a bit of a limbo. We've all weighed in that we think the VIX will be lower in the near term, but we haven't ruled out, of course, a gap to the upside if S&P goes through with their threats or some of the other things that might indeed propel VIX north. There are still a number of issues looming on the horizon, which is why VIX still has the support that it does. Of course, we talked on the last show, and it is coming up next week. RIMM earnings are on the 15th, a week from now, yet an interesting one to play. Of course, we've mentioned people coming in and wasting a ton of money on near-term lottery tickets. Be interesting to see if we see that trend continue with the weeklies going into next week. We haven't seen too many sizable flyers continuing like we saw last week, but we'll keep an eye on RIMM to see if we do indeed see that paper lighting up the tape going forward. And then, and of course, an interesting note we were discussing here in the break is Walgreens, ticker symbol, the good old WAG. And I'm a shopper of Walgreens. I haven't really been in and out of their options too much. I used to trade in and out of Rite Aid quite a bit back in the day when I was on the floor, because that was in our pit, so I'm pretty familiar with them. But Walgreens is not one I've added to my list on a bit. But I know, Mr. Sebastian, you've been watching it quite a bit lately, and you like these vol levels here. You think these are and they are looking really, pretty historically high.
Really historically high. I think relative to the VIX, probably the highest that we have on a record. And when you get vols highest on record, typically doesn't mean the straddle's underpriced. All I'm saying. And I don't know the Walgreens seem like very nice people up in Lake Forest, despite their weird farming practices. But you got to think that there's a reason for this kind of high vol, and is the stock maybe is ready for a tumble, because they've got earnings coming up, but it's this deal with this Express Scripts that I think is kind of the big deal, and sounds like it's going to fall apart. And that straddle for $4 is probably a buy, is what I would say.
I mean, obviously, earnings is going to give them a boost to the underlying vol here. But of course, when something's like this and they're so heavily involved in a deal like this, and you're seeing the vol creep up, that usually is a sign that something may be rotten there at the heart of that deal. And so, interesting to see how this goes. I know we talked about this a while ago, I believe, when that Express Scripts deal was first announced, about how that might play out. It's looking like it may indeed go the darker of the two routes for that deal. Not exactly, these vol levels not exactly boding well for the future of Walgreens here. I don't know what you're talking about with the farming thing with Walgreens.
Oh, the Walgreens family, like, she got a citation for raising sheep in Lake Forest or something like that a couple of years back.
That's a bit of a local trivia there for our listeners.
No. So I always thought that was funny. Yeah, she had pigs or sheep, one of the two.
I'm sure it was one of those things where you put a couple sheep on your hundreds of acres in order to write off the whole thing as a farm or a pasture. Right. We've seen people do that before. Mr. Tosaw, you guys watched Walgreens at all?
Not watching Walgreens, but I think it's going to be interesting in these next few weeks is that we're right at, we went negative on the year on the S&P 500, and I think it's just going to be an interesting year end to watch to see where the market takes us, if we're going to be black or red.
Where's the KYO leaning?
I think I'm a little bit on the bullish side right now.
First Sebastian earlier this week, and now you. I got two bulls on the show today. What's going on here?
I don't know what happened.
I only give my 50% guarantee, though. Kavanaugh only gives the 48% guarantee.
Here it is from here's the story involving the Walgreens. And well, the good news is here's the title from March 11, 2009. Pet pig involved in Lake Forest stink dies. Good job, Tribune. That's so much like and that's such a Sun-Times headline.
And people wonder why the journalism trade is dying.
The ruckus over Pinky Lee Walgreen, a Vietnamese potbelly pig owned by ex-wife of drugstore chain heir Charles R. Walgreen, led village to pass ordinance limiting the keeping of farm animals.
That's fantastic.
Pinky Lee Walgreen, we miss you.
Pinky Lee. That's a good one. I like that. I mean, that'd be a good title for the show. We miss Piggy. All right. So yes, and of course, yeah, I know you guys are both degenerate bulls these days. I don't know if I fall into that camp, but definitely
being a bull is being bullish. The market is like being the captain of the football team and the homecoming king all in one. It's being a bearish that makes you a degenerate.
Of course, that's what it is. That's why I like to turn it on its ear and use that word and take and own it. Because of course we all indeed
stocks go up.
Exactly. But yeah, it'll be interesting to see how this plays out. I'm still a wee bit bearish, even though I do think the VIX has some room to go to the south because I think it's just been inflated for far too long. So I think we could be in a scenario where the market trends gently down, and yet the VIX also trends gently down. I wouldn't be surprised to see that, and in any way, shape, or form. I think people have already bought their units and they have what they need, and now it'll just be a question of taking off that insurance and seeing what happens with our friends over in the Eurozone and S&P if they can all work together, or if we're destined for more tumult to come. So Uncle Mike, you're over under on 12,000 then in the Dow then is over, huh, for the end of the year?
I'd take the over. 50% guarantee.
I'll go with the Kavanaugh 48% under. How about that?
We're both bold men, aren't we?
Yes. Dire bold men. All right, and that is going to do it for the old Around the Block segment. It's also going to do it for this episode of the Option Block. I want to thank all of my partners in crime for joining me on the program today, starting off with Mr. Sabas from theoptionpit.com. And my little birdies told me that one of your articles made its way onto the Kramer show. Was it yesterday? When was it?
Yeah, it was Tuesday. Yeah, Tuesday. If you look up off the charts for 12.6 or off the charts VIX, I did an analysis on why volatility was falling despite kind of the market, which he liked. So he talked about it for about 10 minutes.
I like that he credits you as Option Pit technician.
He did. I was surprised that he called me a technician, but I am, when it comes to, I'm a great volatility technician. I don't believe in like regular market technician. If vol doesn't have technicals, otherwise known as the mean, then why are we trading? Right? It's just more than trading would just be chaos theory.
But yeah, I think that's depending on your view on technician. That's either a nice thing or a horrible slam. I'll leave it up to you to determine which it is. But yeah, what else is coming up over in Option Pit land that might interest our listeners besides the slinkies you're dumping to the desk right there?
No, I know. Well, besides, we recently revamped our entire training program, sans our professional group. So make sure you come and check out our blog at optionpit.com/blog, and then while you're there, check out all the different events. As a follow-up to the Kramer thing that we did on Tuesday, I'm doing a blog on using the VIX to trade S&P 500, which should be kind of interesting.
And that's going to be up on the Option Pit blog, or
it's going to be up. You can go to optionpit.com/events.
Okay, so it means eventually we'll probably see it on the old Options Insider as well, where we are the clearinghouse for all things option, including the mild rantings of Mr. Mark Sebastian. And last but not least, good old Uncle Mike Tosaw from Know Your Options Inc. What is coming up in the land of KYO, sir?
Getting geared up for January. We're going to have a big January. We're going to have lots of new educational material. So go to our website, sign up for our newsletter, and you will get to be a part of that week in, week out on enhanced webinars. Also in January, I'll still be on the Options Express docket, guest speaking for some of their webinars. So go to optionsexpress.com for more information on that. And a lot of exciting things. We're excited about 2012. Did I mention we're excited?
I'm getting geared up for the KYO Christmas party.
Yeah, that should be fun.
That is actually I am not going to be there. So now that you mentioned it, I want to mention where I'm going to be at that point, at that night. I wasn't going to mention it till next week, but I guess since you brought it up, I will bring it up. On December 16th, they're actually having a blood drive at Aurora Christian High School in Aurora, Illinois. It's going to be during their basketball game. And at the blood drive, it's going to be in honor of my late daughter, and also just kind of a testimony to the power of, not only prayer, but also the fact of the importance of giving blood. My wife got 16 units of blood while she was in the hospital, and if it wasn't for that, she wouldn't be here today. So if for some reason you are in the Aurora, Illinois area on Friday night, December 16th, stop on by and wear short sleeves.
That's a great cause. I think that's
God bless you, Mike Tosaw.
That's a fantastic thing to do there, sir. I think that's a great way to honor all
Mike,
those.
I promise that I'll donate. I'm probably not going to donate blood after I go to the KYO party because I don't think they'll take it.
Very wise move.
But I will donate blood in the next 2 weeks as a tribute and as a show of solidarity to you, my friend.
Much appreciated.
A good cause all around. I think all of our listeners could do with some of that, and just giving some blood. It's always doesn't take much out of your day. It's not too painful, and it's a very beneficial thing for people like good old Uncle Mike's wife. We want to definitely honor all of that went into that helped your wife come out, and she's doing well right now.
Yeah, she's doing well. She's proud. She's got all of her blood has been, because she lost 60% of her blood at one point. So most of her blood is back now, or all of her blood is back now, and so still long ways to go in just the emotional recovery of what happened, but definitely a lot better than 2 months ago, that's for sure. And hey, Mark, if someone from the show shows up to this blood drive, can I offer them a Mark Sebastian autographed picture?
Absolutely. Tell you what.
Show up to the blood drive, and I will give you a Mark Sebastian autographed picture
and a slinky.
You know what? I've got 10 of them in my house here. I'll send several because I'm sure you're going to be flooded.
Send them the life-size cardboard cutout. All right, that's a good way to end the show there on a nice, positive, upbeat note, Uncle Mike. I think that's a very good message to send to all of our listeners. And of course, everyone out there, have a safe and a profitable end to the trading week, and we'll see you on Monday right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.